Well, it's the day after the budget and time now to start picking through it all. And we've seen the headlines from the government, Greg, but I mean, the Tesco tax to one side, which is probably what a lot of people are talking about. Today's Financial Times, let's look at this headline. It's made the front page. I mean, bear in mind this programme on the internet, people can watch this anywhere around the world. Should they be concerned about seeing clock ticks on Isle of Man tax haven?
Well, they do say, Paul, don't they, there's no such thing as bad publicity. They're wrong in this case. I think this is not brilliant publicity for the Isle of Man. It's been on the cards for some time. We've known that it's been a measure which the UK has wanted us to enter into since the back end of last year. It's probably fair to say we won't be the last of the so-called offshore centres to be required to enter into this agreement.
Could some people say we're being slightly proactive though by jumping first before being pushed?
The question is whether there's any first mover advantage. I think probably not in this case. But again, it's something which most of the offshore centres, Jersey, Guernsey, etc., will probably be required to enter into in the fullness of time. And you've got to put it into perspective. There are already tax information sharing measures between the UK and the Isle of Man. If you're a bank and you've got, for example, a customer in the UK with an Isle of Man bank account, the bank has got to supply details of that account to the authorities here, and those details then go through to HMRC. That is automatic, that happens at the moment. Any other taxpayer who might be, for example, investigated by the UK authorities, HMRC, they can get information on that taxpayer by putting in an information request to the tax authorities here. So the procedures are there already. What this will do is make it automatic across the board, and it'll apply to not just banks, insurance companies, but also corporate service providers as well. So typically a trust company in the Isle of Man which has got, say, a trust or a company that it manages for a UK client, once this agreement kicks in, the trust company will have to provide details of that client to, first of all, the authorities here, and those details will then go through to the UK authorities. Now, it is only information, it's not a taxing measure, but of course, we know that clients value their confidentiality. Now, in some cases it might be because they've got something to hide. In most cases it's probably not. They just value their privacy, they value their confidentiality, and if they can't get it here, they may well go elsewhere to get it. Now, fortunately, one big area of the marketplace for corporate service providers is a so-called UK resident non-domicile market. And it does look as if, after an extensive period of lobbying, knowing that this provision was going to come in, that the UK res non-dom market is being carved out of this. We haven't seen the full detail of that yet, but if it is, that's good news, and it will lessen the risk of there being business flight from the island to jurisdictions that don't have this provision in yet. Although, as I said, I think it's only a matter of time before other jurisdictions bring it in as well.
Bring this down to simple terms, though. The Liechtenstein agreement was first where basically people had 3 years to hold their hands up, get a small sort of fine, then you're cleared and no more proceedings. Is this an exact same model, is it? People have 3 years to declare.
No, let's not confuse the so-called FATCA agreement, right, which is an agreement whereby banks, insurance companies and trustees have to provide details of their UK clients eventually to HMRC. That's an information sharing, an information supply provision, which we're going to have to comply with. The Liechtenstein disclosure facility, which is again will now apply to the Isle of Man, it is almost like an incentive to the Isle of Man to enter into this agreement to provide information. And what it will do is give, for a short period, it will give taxpayers who haven't disclosed all their offshore income, if it's Isle of Man offshore income or capital gains, it'll give them now a window in which they can go to HMRC and say, I'm sorry I didn't tell you about this before, I'm telling you about it now, knowing they probably won't be prosecuted, and knowing that what could otherwise have been very large penalties will be fixed at quite low penalties. So it's an incentive for a short period, up to 2016, for taxpayers who haven't previously disclosed all their income and gains, now to do so.
This is a nightmare, isn't it? I mean, this is what the Isle of Man and the Channel Islands and these other offshore jurisdictions were known for being able to keep this sort of information safe.
Well, it's interesting. It's based on something called the Liechtenstein Disclosure Facility, or LDF, and no doubt people will refer to this as the Manx Disclosure Facility, or MDF.
Yes.
And the LDF was actually very well received by taxpayers, the tax authorities, and tax advisors alike, and everyone seemed to do quite well out of it. Now, the MDF we're hoping will be similarly well received. The one thing it doesn't quite guarantee, we don't think, is immunity from prosecution, but I think it's inconceivable that anybody who comes forward under this and makes a clean breast of their tax affairs will get prosecuted. The revenue will probably be happy with it because they'll get some tax. That will be interesting to see, because we've known that for years the revenue have been convinced there are untold billions of undeclared wealth here in the Isle of Man. They're making this disclosure facility available, and although you don't have to have a bank account in the Isle of Man already, it needn't be undeclared Manx wealth, because it could be wealth that you haven't declared from elsewhere, which you can bring into the revenue through this facility simply by opening a bank account here. That's something that the LDF was quite useful for as well. You didn't really have to have much of a Liechtenstein connection to benefit under the LDF. And so you should be able to do the same thing here as well. So it remains to be seen whether, if they do get lots of tax in, it'll be tax that's on income and gains that's undeclared from here, or income and gains that's undeclared from elsewhere, that people are bringing through the Isle of Man simply to take advantage of this facility. They can't do it under the LDF anymore because that closed, although the facility's still open. The ability to latch onto it from elsewhere has now closed. So it does remain to be seen whether the revenue get the untold billions they're hoping to get to. In one sense, it will be good news if they don't, because that will prove what we felt all along, that the Isle of Man is largely a compliant jurisdiction, and that people who really desperately want to evade tax go elsewhere.
Mm-hmm. Okay. Back to more people in the Isle of Man, self-employed people possibly now. You know, this thing where the tax, if it was in the company, they had to change the rules. Excuse me being so low on this one, but you can explain it more to me. They're having another go at that, aren't they, to try and get the tax to be paid on that, even though it's still in the company? Yeah,
no, the position is that the general rate of tax in the Isle of Man for companies is 0%. Now, when the 0% rate was first introduced, it was accompanied by a sort of an anti-avoidance rule, whereby if you didn't distribute a certain level of profits from your company, you were deemed to have distributed them anyway. So you still paid tax on the company's income, even though you didn't physically take them out. So the fact that you had corporate income tax at 0% didn't particularly help you if you didn't take the income out and pay tax on it personally anyway.
How's it going to affect people? That's what we want to know.
What's changed is that because of pressure from the EU, that anti-avoidance rule had to be withdrawn. And so at the moment, it's possible for somebody, provides his services through a company, pays 0% tax in the company on the income that goes into the company, and then doesn't take it out and pay personal tax on it. And so there's no tax being paid on the Isle of Man on the value of those services.
And the critics were saying the Isle of Man will see a bit of a black hole there because that money's suddenly disappeared, right? He's going after it though, isn't he?
Yeah, he is going after it because he thinks it isn't fair that people who are employed pay tax under what's called the ITIP system. People who are self-employed or create their own employment structures, known as personal service companies or PSCs, can avoid that tax altogether. So he's going to introduce a rule that says in future, if you try and operate through a personal service company to take advantage of the fact that companies pay tax at 0, you'll still have to pay the tax personally anyway, because it isn't fair to avoid it.
Will Mr. Murphy and the OECD and all these other people, will they start going, hang on again, they're trying to make two different rules here?
I hope we'll give 3 cheers for the fact the Isle of Man is doing its best to make the island a fully compliant tax jurisdiction and to make sure that everybody pays what some commentators call their fair share of tax.
Okay. Finally, out of 10, give it a mark. How was this budget?
6.5.